Hi everyone, weekly stock market update. So I got my son involved with this. He's very keen that everybody likes because he's now got the stock market addiction of checking every second the likes and the subscribers. So that's his line. So let's get on with part one of the stock market update. We're going to go through obviously what is a very important week, what's been an important week in the UK, and obviously an important week coming ahead in the United States as well. Remember, this is not individual financial advice. I don't know your personal circumstances. It is far more a case of information and education. So going into the market, this is where we are with valuations. That's my son again. Have we got lots of reds? The reds mean it's overvalued. You're paying $75 for a future dollar in profit of Tesla. However, these are undervalued. You would think the green ones are, because they're cheaper, are better investments. However, this doesn't allow for growth, which is why we don't just look at valuations alone. These are upcoming earnings announcements. You might want to keep an eye on these. Nothing's going to move the markets, but you'll keep an eye on them in case you own any of these stocks. For instance, if you do happen to own them, then you'll want to keep an eye on these earnings announcements. Feel free to pause this, of course. Now, this is where, come here, this is one message that my son certainly wants to share with people is don't forget to please like, comment and share because he does look to see how many people have looked at Daddy's weekly stock market update. Remember, with the updates and the stocks that I'm going to go through, we're going to look at their value, growth, income. This croaky comes from Goldman Sachs Wealth Management. We want companies which are in the top quartile, which I mark in green. Value, growth, income is my proprietary algorithm, which is probably the most important thing to me. It values. This is part one. Valuation is more important than growth, is more valuable than dividend yields. And that's from the hedge fund industry because we know momentum persists and we want the kind of companies which, if they drop, don't drop too far and then spring back quickly. That's what Sortino will give us. Okay. So let's have a look at some of the details over the past week. Rian, how's it been over the past week? It's been largely red or green?
Red.
Well, it's been mixed. It's been mixed. What about over the past year?
Green.
It's been largely.
Green, I think.
Yeah. So it's been a good year, and that's what we're here for. Those who are on my Great Investments program, the point of the program is that I can't control what's going to go up, but I can show people how to get to Paris. I can show people how to take advantage when these opportunities arise so they don't miss them. And the opportunities of maybe an Nvidia going up 219%. I didn't know it was going to go up 219%, but we're able to take advantage of that.
Green.
Exactly, there's a lot of greens. And if that happens again, and 5 years out of 7, you get something which looks similar to this, great. 2 years out of 7, you've got to hold cash, which your fund manager can't do and your wealth manager can't do. In fact, your wealth manager won't get enough kickbacks to sell you US funds. And if they do, they'll put so little money in them that it doesn't impact your pension either. And given that now, with the UK budget, 67% of your might be the effective tax rate on your pension if you live over 75 and have used up your allowances, then performance is more important than ever. I'll write about that on my LinkedIn separately. So exchange traded funds, that's what it looks like. You can pause that if you wish. Market performance year to date, where are we? The S&P is up 20%, but it is composed of these periods, which is why we look at things over a 12-month period and not just, he's crazy, not just over a week or two. Okay, so the reason we are looking at not sectors and trying to gamble on that is because look, you can see it's gambling, and people say, oh, let's do sectors and which sectors might do better. No, that's too much like gambling. At the start of the year, how do you gamble on that? What we do instead is we will look at the individual companies, bottom-up approach, okay? And we'll look at the factors which move stock prices. And the reason we always want momentum ticked, we want momentum ticked, and we want value ticked, and we want income ticked is because then you are filtering. It's as if you've got a
Don't
big
forget to
filter.
like and subscribe.
They won't, don't worry. You put a lot of companies in, but you end up with just a very few that come out which tick all the boxes. So you get the better returns. Markets over the past year, 40% on the S&P. I didn't know or was not in a position to forecast that. But what I did know is that the companies that I have, because they're undervalued, high growth, dividend yielding, good croquis, Sortina and Alpha, they should capture that. Now, an index would capture that. We're trying to cherry pick the ones from the index, remove the bad ones, basically. We're not trying to cherry pick the best ones. We're trying to remove all the bad ones, and then what's left should do even better than that. So just so you understand, and that's where we are with that. Okay. So that's top 10 FTSE 350 over the past month. That's what they look like. I want to go more into the S&P 500, which is that. Now, where are we on this? We're here. Where we were a while back in 2021. So will we get 2022 repeating itself next year? We might do. I don't know. What I know at the moment is my S&P 500 index and triple leverage I continue holding since January. I've got a big endowment in it. If you're risk loving, you would buy more of this on the basis you think it'll do this, but that's risk loving. But if you're risk averse, you wouldn't. You'd wait. And if you're risk neutral, you might dollar cost average in. The same with NASDAQ. Exactly the same picture with the NASDAQ. FTSE, we'll have to see if it drops, continues dropping below that moving average. If it does, that'd be significant. S&P top 10 stocks over the past month have been these. And of these, what you will notice is, well, let's go through these. That's what we'll go through on these. Now, I'm going to do that and go through these in part 2. But for the moment, we're pausing here. Thank you very much. Oh, and don't forget to like and subscribe. Rian, any final messages to everyone? Go on, camera, tell them. Okay, good.